Okay, good morning everyone. Sound good? Let's see, Thomas, Lily, Helen, Tim, Gwen, Peter. Uh, we do have support with us again today, so any questions will be helped along. And I will try to answer as much as I can too as well, okay? Just making sure all the sound is good and we can get started. Okay, terrific, thanks. So for today, March 30th, 2020, as we are ending the month. So our market focus for today is, so if you remember yesterday, when we came into the market, we said that there was quite a bit of bad news that came in. However, the charts did not particularly show us too much weakness. So you can see as the day went on, we just continued to rally, basically all coming off of our weekly and daily demand zones. Today, what I see is we're coming in with a little bit of a different scenario. You can see that we talked about yesterday the China manufacturing PMI and non-manufacturing PMI. They were actually both better than even the forecast, which was supposed to be better than the previous. So it, when you see that, it should be, very bullish. And instead, we're not having, I wouldn't say that great of a rally coming off of these, because what they're saying overnight is things are starting to level out, and we're starting to see a little bit less cases, and China's getting back into work. So all those things are coming out, but yet you're not seeing a huge move off of any of this. We did continue to have a strong dollar rally off of our demand. We are coming into some near-term supply, so we'll look at that. And you have to remember, too, that this week, the data that's going to be coming out all week is going to impact the dollar quite a bit. In the larger time frame, the dollar, has been more or less range-bound within the monthly and weekly. So it's not too surprising if the dollar moves all the way back to the highs or all the way back to lows. It has remained inside of a range, even though it looks like huge moves on both ends, right? All right, let's take a look at our next. So before we move on, I think it's good for us to recap a few things just so you understand. So you can see this is from our very first session, and this was initially to look for that goal by taking a small time frame to try to capture this upward momentum. And you can see what, you want to trade what's real and not what you feel. A lot of times our emotions get caught up into it. So for any of you yesterday that missed our slide about the session guide and the overall basic trading rules, you want to go back and take a look at that, because that applies to a lot of the things. First of all, the session guide you're going to need just in general to know what we're talking about with the different circles and squares that we use, but also just in general how to try to keep your emotions out of play. So you can see we had a downtrend, bad news, fear, and most of the time people are thinking, it's time to sell, right? And meanwhile, your low risk, high reward, high probability opportunity is right below that area. How many times, especially new people come in and whatever you do, you think the market's out to get you, specifically you. You think that the minute you sell, people are buying. The minute you buy, people are selling. And then you're thinking, wow, somebody's watching me, this. And most of the time, and no, it's not that. That's what the math is doing, right? So, you have to pay attention to the supply and demand zones. You have to follow into, I always think it's funny, because when I first started, the thing that you always look at was oh, well, you want to get confirmation. You want to get 3 candles up, 3 candles down. So the minute I try to buy after 3 candles up, that's exactly when prices started to, move back down again. And then when I try to sell with 3 candles down, that's when prices started to move back up again. And maybe one time, once a week or, once every so often I would get it right. But then most of the other days I would get it wrong, right? So just remember that. That's why we want to really focus on the pure supply and demand. And really, we want to get the foundation correct. Okay, so you can see when making decisions, don't let your emotions overpower your logic and intelligence. Make your vision so clear that your fears become irrelevant. And a lot of that will come into the set forget as well. You don't have to do a whole lot with that. Okay? Yeah, exactly, right? They're watching your 1 contract, 2 contracts. They're watching exactly you. The other one that we want to look at too, and this was the British pound, and this was one, if you would need to go into a session guide, you need to take a look where we were looking at a level that was forming. And you can see with this, we had the formation, and since that time, we had a really strong rally out, and then we fell all the way back in. Now, you can just see the quickness of how prices fell in, right? So banks buying at demand, you can see. Novice traders sell, low risk time to buy, because you can see, prices start to fall. Then all of a sudden you say, "Oh, I got to get in, I got to get in." And then before you know it, you don't realize you're at demand. And now, that's exactly how they make money, right? So our low risk, high reward British pound work well. And I know many of you were in some of these trades too. We'll also go through some of the opportunities that's a little bit that were, if you take a look at as we come and move up, we were in the middle of the range, and we'll talk about that too as well when you have new areas that form while you're in the middle of the range too as well. Okay. All right. So now let us go into some of the charts. So I thought we'd take a little bit of a different approach today. All right, so this is the Nikkei. And the reason why I'm pulling that up today is because, like I said, the first thing that, was coming out that we said we were going to watch overnight was, China being just overall looking better in general, back to work. Some of the, the restaurants and all those things are open. However, what I do see with all that is, a lot of people are still not, they're still afraid of going out and eating and things like that. So that's understandable. So you can see that the Nikkei has bounced off of. And why am I starting with this? Because if this is what's leading the market at the moment, we want to take a look at it so that we know, is it leading us correctly? So definitely a strong move off of weekly demand zone on the Nikkei, but now we have come up into, you can see a daily supply zone that we have hit once. We did fall out. We went back in again, and now we're still stuck in the same area as prices have tried to retreat back again. Okay. So what we're going to look at now is on the 45-minute. Demand, fresh demand is still quite a bit lower. You can see that's coming in at 17,140, 16,634. Like I said, what's important about this is yesterday with the good news, we didn't have a tremendous, making a new high and all. I believe this looked like it was a little bit of a limit up, and then when prices started to hit the same area, it started to come back down. Since that time, we haven't tested it all the way back on the 24th, basically. So now this market is still struggling to make that new high. even given what we've seen, what we have overnight. What we've seen, also, let's move on to the next market that I want to focus on, which is so now if you think about it, we started with the Nikkei on Asia, right? How about the next one? The next one we want to move into is going to be into the DAX, because we want to see how now Europe is doing, right? Because now what you've been paying attention to all throughout the news is how are these markets doing? How are these countries doing? They're not telling you the markets, but they're just telling you, well, how is Asia doing? How is Europe doing? And so when we go and take a look at the DAX next, what we do see is, it hit some monthly demand. And now we are looking at, let me take a look at the 60-minute. Actually, I'm on there wrong. Let me go to the DAX. Okay. So we can see we hit some monthly demand, and now, right above current price, we do have a level of supply at 10,461 to 10,605. And then again, fresh demand is still quite a bit lower. You have a gap that's right above, as well as these two levels on top of each other, 85.26 down to the lows. And you can see 83, 81 on the next one. But what I want to point out with this is a lot of the charts look like this. Many of the demands have been tested on the way up, and our fresher demands are still lower down. And you can see, just like with the Nikkei, we are not seeing a great amount of strength coming into the overnight. Initially we were, initially we did, but since then we have fallen back in a few of these. And when we take a look at it, we see that another important point, like this is all, I think what I'm trying to do with all this is I'm trying to wrap your brain around, yes, we want to go and look at the S&P and Nasdaq and the Russell, all the things we want to trade every day. And some of you are trading these other markets, but what's important about this is trying to get your head thinking about how these other markets affect us, and then try to put it together with what you're trying to do. Does that make sense to all of you? For those of you that are new, it's going to be, like I said yesterday, for those of you that are new, a lot of it's going to be, oh, well, I'm just, focused on the stocks and all, right? Hey, Ruben's here too. Huh? All right, so let's take a look at the bonds, and I'm going to move there next. So this is what we're seeing with the bonds at the current moment. And to me, the bonds, they've lost a little bit of steam in terms of having that inverse correlation to the stock market. What they have, though, is a little bit this week started to fall back in line with it. So it slightly, we are showing somewhat where we're having a little bit of weakness in bonds, a little bit of strength in equities. But before that, yes, we have been losing a lot. You can see at the start of this week, bonds being the inverse in stock market, and the dollar also moving together. So we've lost a bit of this inverse correlation. But I do believe that this is likely to change during the week, because yesterday we pointed out that the few economic, Wednesday, Thursday, Friday, as we come in to ADP, NFP, all those things can affect the dollar. And for today, too, don't forget, they're talking about possibly a fourth stimulus for the U.S. So all of these things are in talks, but yet we are not seeing any great sort of rally as well. So you can see here on the 180 on the TY, this is a zone we've been here. So this is the 10-year note. This is a zone where we've been here quite a few times, but we did come back again, and we have fell out. we are now testing, we have tested the lower. You can see the so we had this demand zone yesterday, which is the 240. If you did get in for a little bit of a bounce, you can see so far we have come back to the previous, you can see this candle's low right now. And our lower demand zones is still coming in closer to the, I believe, the 60 minutes down below. So that's the current look of things. Of course, for this overall market to really start to take off again, it does need to break through this upper supply zone that it's been at a couple of times already. So you can see it's right in the middle at the current moment. So not giving us a great big clue for the equity markets, but the one thing it has done is, yeah, once it hit demand, we did see some weakness inside of the equities for today. So we can use it as a somewhat guide, but at the moment it's moving, I would say, much slower than how the equities are moving. So I would take it just as a market on its own for right now. Okay. All right. So let's move into the S&P. All right. So you can see with the S&P right now, when I was looking at it this morning, we were actually almost looked like we were going to be gapped up. We were sitting at about 26.23. Right now, you can see we're all the way down at 25.81. So it's telling me that there is, quite a bit of a range coming into the overnight. As you can see right now, we are still currently making an overnight low. The overnight high right now is sitting at 26.35.75. Overnight low is still being created, right? We still got another over an hour before the overnight low is fully created, and you can see that's it coming in at 25.76.75. On the smaller time frame, you can see that we have formed a little bit up at this 2600 and also up at this 2621. Now these would be overnights. So say for instance you're looking at some of these areas. Say for instance you're looking at this upper one, right? So this would be where you draw your area, but then instead of putting the square, you would put the okay. So this way that you know that it's an overnight level. Overnight level, what's the issue with them? They're typically going to be lighter in volume, so not as high quality as your day session levels. But I do see that we have been having some volatility overnight because of all of this, this virus, and therefore they have been, pretty decent in the overnight lately. Okay. This one we can take a look at. Let's see how it looks on. Let's go to a little bit higher time frame first, so we don't really see a whole lot there. Then we'll go 15. So you can see prices did take a little drop out of there. We are hitting into some demand through this. This may be an area that I just watch and see if we start to break a little bit below this area, and then I could still look at this again. But for right now, I'll leave it up at the higher area. So that's coming in at the 26.21 to the 26.26. Now remember too, is it on here? So remember too, so this was the zone that we hit before that we started this whole move down. So that was all the way up at 27.01. Our really fresher area is the upper zone, which you can see is 27.65 to 28.06. So that's really the fresher zone that we have never tested before. And then you can see when we go down to so as we come down, we take a look at these areas down below. Again, our fresher overnight is going to be the much lower area, which is going to be down towards the 2268 to 2233, right? I know some of you are probably looking at these lower areas. So this was formed during Asia. Now, the one thing I want to caution you about these upper areas. So those of you that have been with Sam and the other sessions, came off of two 5-minute areas inside of here. So really, you can see that this is a kind of a move off and then a pull back into 5-minute areas, and then we've continued to move off of those zones. So these zones, to me, would not be also a completely fresh area. So even though it looks pretty decent, you know, a nice little move below this previous low, we have some 2 overnight demands down below, but to me, that is not going to be extremely fresh area on the demand side anyway. Okay. The other thing I did try to do was just take a look. I know we're spending a little bit extra time on the S&P, but a lot of people are, you know, usually concerned about it. So I did take a look at above the overnight high. And what's the importance of that? Sometimes with the overnight high, you know, we like to look for little trap areas. And the good thing is we do have our better supply zones above it. I think I need a little bit more data. No, you would just pick out the ones you want. So I would highly suggest that when you're drawing your zones, here, we'll go over a second, but you can see here back up at the highs, these are, you know, these would definitely not be set forget areas, but I would take a look at them as they start to approach, you know, the 2680s, perhaps even the 2662, right? So these, because they are overnight, not in a fresh area, I would not do these as set forget. But remember too, with these, so take a look at, right? So for those of you, especially those of you that are new, don't mark out anything that you don't want to take, right? Don't mark out things that you know, like say for instance, you're not going to, all right, so say, like, don't do this, which is, oh, okay, well, maybe this one, oh, okay, maybe this one, all right, okay, maybe this one, right? Like, don't do that, because now you're, all that's going to happen is you're probably not going to take any of them, right? So you're trying to make your best judgments on what you're going to take. If you don't want to take anything in the overnight, no. What I would highly suggest you do is make out rules for yourself, right? Some of you may say, I don't want to take any overnight. Some of you may say, I don't want to take any 5-minute. Some of you may say, you know, I just want to focus on the higher time frame. If I'm off of the daily level, I want to take it to the next higher time frame area. I don't want to deal with all of this. You know, put it inside of your rules and make your trading decisions and draw the lines that only that you are willing to try. You know, say if that was there, that you are willing to try to take. Don't draw a whole bunch of lines that you're not willing to take. Okay. All right. Let's move on to the Nasdaq. The Nasdaq did get up into, if you take a look at this right now. Now, some zones you may have up there that you have hit before. Yeah. Yeah. So some zones that you have on there that may have hit before. So it's not a bad idea to leave them on just because in an area that worked, if it just touched the level and left, they can be areas that you try to take again. So you can see here on the high, we have hit this overnight high up at 79.57. And so far now we have hit down to the 77.64. Now when we take a look at this at the 79.57, we're going to see that we came right back up into this area again. So do you see this? So this is the NQ.D. Okay, so this is the day session. If you take a look at this, 79.57 brings us right back into here. So think about this too. Now, if we come back in to, so say for instance, this is 9:30 and we trading starts, it's an hour from now, trading starts, markets start to rally again, rally back up here. So how many times has it been back there? Right? How many times has it been back to this area? You're looking at this, so I'm going to bring you up the other picture just so you know, because people, say for instance you're trading the Qs, right? That more than likely is going to be right in there too. Right? So what you need to pay attention to is, okay, we've hit there once. We've come back there, right, again. So if we come back in here again, that's going to make it 3 times. Right? Yeah. So if we go back in again, that's going to make it the 3rd time. Yeah. So now you can see your odds of it working has now just been lowered. Okay. So that's something to pay attention to. Because a lot of times people would just come in and see, okay, well, this is the Qs, this is the SPY. All right, okay, it looks like we're coming back in there again. But meanwhile, in the overnights, we've already come back in there. We had a pretty good drop already, as you can see. So again, now the higher level is going to be the fresher level, right? Now, same thing when we take a look at this too. So remember too, this was the area when we had the 4-hour demand zone, and this was the 5-minute zone that we had on last Thursday. Like I said, the main profit where Sam and I got out of was right up there. We did make it a little bit higher, then went back to almost back to entry again, and then now we are again a little bit higher too. So to me, this whole area in between is not really fresh anymore. And again, if you want to down a little bit lower, this is going to be an overnight. So overnight areas could be ones that if you want to keep an eye out on. That's going to be your overnight below that previous area that we took. Okay. I'm not going to go with too many changes on the other markets. The other markets we're going to keep because for RTY and YM, it does look like to me we didn't get back to those higher zones. You can see on RTY, which is the Russell, that is coming in at the 1163. And you can see that's way below. So the gap and the level above the gap, the Russell is not near there yet. Okay, so those areas, both on the Russell, are going to be fresh. Okay. You're asking about the 7600. Let me just see what you're looking at. Yeah, So like I said with these, right, so you can see right here you have a 30-minute, 60-minute level. So again, these areas can work. So if we take, let me go to the 60-minute just so you see. Right, these areas you can see can work. You can see this one, right? The difficulty now within this whole area too is going to be, well, number one, like this, we were very close to the supply, so so it worked out for, if you're a short-term trader, it worked out fine for you. If you're trying to hold it to new highs, you know, that might have not worked out so good for you. And now you can see, so if you're looking at this area now, all right, if you're looking at this area now all of a sudden you're looking at, well, you know, this, you know, can work for you too, but it's going to be all within this whole range here, right? This area or this area. All right, so it's all going to be within this whole range. You know, the best thing you can see is really getting in closer to the lows where prices start to rally out. Now you're continuing trying to take basically areas where you're trying to get a trending market when we're not quite certain that it's in a back to a full up mode yet, right? We had very nice moves off of the demand levels, but now as we get higher and higher, your odds become, you know, lower with these. Okay, yeah, exactly. So many of you that's been in with Sam knows about the white space, and you know, as we go through time, we'll get more and more into these things. You know, a lot of people even ask about some things such as you know, options and things, and I just want to stress the point to you. I mean, that will come in the future, but what I want to stress to you is that if you really need to get your foundation solid, because you know, a lot of people in the options, what they kind of focus on is non-direction, you know, like people don't particularly know the direction of things. So if you start to really know your foundation well, that's just going to give you that much better advantage over the others when you really dive into it. So so right now we're concentrating on what's important as we continue to step to move forward. Okay. And then same thing here with the Dow. The Dow, you can see right now is about like right back at the 22,000 mark. I believe it's just about like the Russell where we did not test the gap and we did not test the higher area. So let me just make sure. 23,472. And yeah, so you could see right now 22,386 is your overnight high. And the overnight high looks like it's just coming inside of this yesterday's high. So yeah, so the Dow and the Russell are the basically the two markets that have not tested their gap that's up above. Okay, so that's on the equities. Let's move into, okay, so let's take a look here. Okay, so crude oil. Crude oil starts a little bit earlier, so it's going to be in about 21 minutes where the pit session starts. Currently, it has made an overnight high of 21.89. Yesterday, we were talking about into around the 19 range, but we didn't quite get the level of it at the moment because you do have to go back quite some time to look at it. But it is into a, so if you want to take a look what it looks like in the bigger picture on crude. So this is the bigger picture on crude. This is where we're in this, right, as you see this base coming at the lows here, all the way back in 02 here. This is where we're back into, and we had one bounce off of it before. Now we went in a little bit deeper and now starting to bounce again. So even if the market is still on the weak side, it's still getting pretty decent bounces off of this monthly area. Now we didn't quite get back to the upper 5-minute zones. So you can see that's where we had 3 on top of each other. You can, you know, if you're there looking at it, you can definitely watch them as they come in. You know, sometimes if they shoot up pretty quickly, this way your risk becomes a lot less if it does move up pretty quickly through it. This way, if you just need to take the top 2 or the middle 2, you know, you can see as prices start to come back in there. For right now, though, if we continue to stay up at these areas, so right now it's at 2097, you may have a gap. So it still remains to be seen right now. First of all, how big is the gap? You can see this tiny little bit of a supply that's kind of formed, you know, just a tiny little bit at the moment. So you can see this. Let me show you. So since we made the lows, you can see this 2040. This one thing I do want to take a look at though. So I want to see the overnights. So yeah, yesterday's low, overnight low. Okay, so the gap is a little bit above yesterday's low. That makes it a little interesting. Let me just look a little bit smaller. Just want to see if there's anything. Not really. But yesterday's low is coming in at 1927. Okay. 19. So that, you know, okay, so that is within this overall area. Just going to be very low onto it. So this is the overall. If we remain up at these higher areas, you may have a gap in play finally. Let's see, 2145. Just looking at a little bit more closely. 2145. Okay, so, all right, so if we take a look at it right now, since the overnight high is 2189, the close gap, we're pretty much above, we went above it, right? So we're 2189, so that's kind of telling me this first gap we've already, I would say, taken out, right? You can see right here. We've already taken out. Above our first little gap is going to be a couple of 5-minute zones on top of it. And if we remain above here, this is going to be our gap demand down below. Okay, so a little tricky situation since we had a lot of weakness inside of crude, but it is something to watch out for given where we are on the monthly. Okay. So remember with this, so important point about this. So those of you that's interested in using some of the pit session charts and .D charts and all, when you're doing the futures market, you always want to make sure you go back and look on the Globex areas, just because you know, it's going to look like it's a completely fresh area on some of the pit sessions, but when you go back and take a look on the Globex, you're going to realize, you know, it's not fresh. So so you can use them as a how should I say, like an extra confluence perhaps, but don't use them, you know, primarily by itself, because like I said, a lot of areas will look like it's never been there before, but it has. All right. Okay, so for gold, I decided that we are going to skip it for today because you can see, so take a look. It does look like it's in the midst of rollover type, so to me it's better just to leave things alone when it's like that and wait till it gets back to a little bit of normalcy. You could just see here. So that's why I am going to skip it for today. I think it's gold and platinum both are looking like this. So, okay, but I just thought I'd bring it up just so you can see. Copper. Okay. Copper starts a little bit earlier. You know, the metals start a little bit earlier than the energies, and you can see now it's gapped up again. So it is showing some strength with the recovery in China. So we are starting to get a little bit of strength coming in. We do have two gaps below. If you go to the 5-minute, I believe. Maybe I need a little bit more time. Okay, so you can see now down below at 21,025 down to 2082. You do have two levels on top of each other at the gap area below current price, but now we are also gapped up again. But anyway, that looks like the fresher area down below on copper. Okay, so the question about moving averages. So, you know, some of you, I'm sorry if I do miss some of your questions. Support, I know, is helping the best they can. But, you know, I only get to see whenever I look over, which, you know, that's not as frequent as I like, but that's the way it is. But I do see about the moving averages. So what you want to do with the moving averages, so you'll see that some of these charts, they do have a, let's see, let's go back to the Nasdaq. All right. So what this app does is it gives you where the daily 200, the daily 50. You can put in what you want to, but those are popular ones. What you want to be careful is because you're looking at like this. When you're new, I would suggest that you actually put on the moving averages, you know, inside the where it says insert, put on the moving averages, because it is important for you to see, right? When we're in the uptrend, right, you're going to have the daily 50 and the daily 200. You're going to have them ride alongside each other, right? Nice angle separation, nice trend moving to the upside, and you're not going to have a whole lot of crisscross. And this way, when you have a nice little pullback to the 50, you're going to get a little buy coming in, and then a bigger pullback in the 200, another buy going in. But you can see that when we are starting to get at very extreme areas where we have just an incredible bull market, and then we have news such as what's been going on, you can see things just start to turn and start to fall. So now, what people start to be looking at is, oh, okay, now we're below the daily, we're below the 200, oh, we're into the bear market. But then what you always want to be careful with that is, are we actually coming into some demand? Because a lot of times when they call it and they just went below it and there's some good demand there. I mean, luckily there wasn't, not luckily, but below this there wasn't a whole lot of fresh demand if you really take a look at it, right? None of this is fresh demand. So prices went lower before now it's retreating back. So they are going to be now areas that that people are going to look at again, because people more than likely have bought around those areas, right? Some people probably try to buy in there. Some people try to buy in there. And so when, prices start to retreat back to those areas, now, people, not everyone has the best, how should I say it? Not the best, yeah, instead of saying, oh, let me take a little bit of a stop, some people will be going, well, okay, it's going a little lower, let me add in a little bit more. Oh, it's going a little bit lower, let me add in a little bit more. Oh, let me keep adding. And then before you know it, they're like, wow, okay, when is this going to stop, And then sometimes if you're lucky, you survive it and you come back again. So if they're one of those people that are lucky and they're going to come back again, they're going to think, oh, whew, I'm lucky it came back again. Maybe I should get out, by the time if it gets to break even or so. So, those become important areas again, once we start to reach back up in there. Okay. Okay. Now let's move to the all-important dollar. So for today, there's two things that can try to impact the dollar. We have the CB consumer confidence. And also, like I said, talks have started for a possible fourth round of spending, covering extra, for the states, and plus support for mortgages and the travel industry. So those are still going to be important factors for the dollar. If you remember with the dollar, we were looking at this area too. So with the dollar, what you'll see is that we came off of our supply zone, and we were looking for it to break demand and then continue lower. So what I wanted to point out to you is some of you were trying to short some of the currencies while the dollar wasn't down here yet. And you'll see that they were just short-term bounces. Most of them had some near-term demand that of course won out because the dollar wasn't there yet. So the importance of looking at the dollar is, you can take, if you're going to take areas that are in between, because everybody's a little bit different trader. I have no problem in taking an area if I know that my opposing zone is going to be close, that I need to get out because I'm not at a significant area. I'm okay with that as long as my risk reward is still decent. So it doesn't need to be a great, it can be more of a day trading type. It's okay, but I need to realize that I'm not at extremes. So usually in between, you're probably only going to get a small move out of it. So a lot of you who are trying to short some of the currencies when the dollar was still sitting up here, you can see, right? It was not ideal in terms of holding it for a longer play. Once we came down into our demand zone, though, you can see that if you had an area to short the currencies, or you try to get in it once it hit the area, you can see that now we've had a nice, really nice bounce up from it, and also now, okay. So can you see prices? So we've had all this news with the dollar, right? First of it was, oh yeah, let's, with the stimulus, okay, the dollar's, falling. Oh, and now all of a sudden they're, now it's saying, oh, well, dollar's a safe haven, dollar's this, all that. But meanwhile, what's it doing? It's traveling from our supply zone to our demand zone back to our, near-term supply zone. And meanwhile, we're still saying this today is, okay, the dollar can be still on the bullish side because of two factors, right? The news that we're expecting during the week is already forecasted to be weaker than what was previously mentioned. However, if the news is weaker, then even the forecast that they're saying that's actually can still be strong for the dollar, just because now the dollar can become a safe haven because the stock market is going to get weak, right? But if the news is better than expected, that can also still be strong for the dollar, because now it's, strong for the currency to be better. So the dollar has two things going for it that can cause bullishness. And, being expected, if the report is more or less expected of what it is, it can remain a little bit range bound like it's been, right? Just basically, moving from some demand to some supply, and that's what it can be, a little bit range bound. So that's the importance of it coming in during the week. But for right now, this is what we have. So we've come in and hit our first 60-minute area at the 99.89. I believe somebody mentioned a little bit earlier that the euro was then also hitting. Okay. So yeah. All right. So let's first start out with this. So this area here that we had yesterday was not quite the same as the original one that was in the pound that we started at the beginning of the session on the slide. The pound actually gave you a strong move out, quick move in, and then another very nice move back out again. This one you can see was different. Where if you're waiting for the level to form and waiting for it to break, you can see that things things have already fallen out of the zone. Sometimes with something such as this, what I would do is, if I wanted to take it before the actual break of it, I wouldn't go for the extreme move, because I don't know particularly, even though this is not a great demand zone, but if prices didn't break there yet and I want to take it beforehand, I wouldn't try to go for, I wouldn't hold out for a bigger profit margin before then. Now, you can see as the dollar hit into, right, because the euro makes up about 57.6% of the dollar. So you can see as the dollar hit into supply, the euro has come into demand. Some of you said you did take it. Is that correct? I believe some of you were saying. So if you have the actual dollar feed, you could take the dollar. For those of you that are taking it in the euro or the spot market, now what we want to take a look at now too is a couple of things, where if we go back to the dollar, yeah, and I see some too, right? Because now you're saying that, okay, well, now is this going to be the new area, right? Is it going to, more than likely, yeah, it is going to come back down. It is going to, and to be honest with you, I think if all things remain the same, we could be a little bit quiet, and then the main determinant is going to be as we come in during the week, right? So this becomes, you're having major dollar news coming out. You know that your trade can be really amazing if the dollar's in your favor, right? If the dollar's going to collapse down again, but now what you're faced with is this. So the only thing I could say with that is you have a couple of choices where, depending on what type of trader you are, if you're really strong about your directional play, you just continue to take the risk and hold on to it. Other than that, you want to take the easy money, get out before it, right? It's not going to be a great, the best risk reward, but if you want to take the easy money, that's what you would do. You get out before that area. Another thing, which usually is not always the best, is as prices start to approach here and we start to roll into another day where we could have news again, and you move your stop to break even. You know, a lot of times when you do move your stop to break even, it does get taken out. But given this scenario, I wouldn't blame you. You know, the dollar's not in a great, you know, let's take a look again, just the bigger picture of it. Right? The bigger picture of the dollar is this. So what I'm trying to show you is it's not in a great, you know, trend. Right? It's kind of just in between this weekly and this monthly. And between the two, now it's sitting right in the middle. So would I have a really strong opinion of it? I would say no where it is. So that's kind of telling you that it can really move in either direction. Would I say that there's two factors can make the dollar more bullish than not that's going to come in during the week? Yeah, because the news would basically have to stay more or less where it's at, expected right now, for it to you know, remain the way that it is. So, you know, you make your own judgments with it. Just make sure you understand where the nearest supply is on the euro, and then where you know, what you want to do with the overall trade. Okay? Yeah, just thought I'd give that out. And so I just want to do two. I'm going to go into, so yesterday we did also have some, let's see, the Kiwi did have some bad news, but I didn't go look into it too much yesterday. Let me take a look at the dollar yen and the dollar Swissy. So you can see now with the dollar Swissy, also we are nearing also to an upper supply zone at 96.86. With the Swissy, remember too, if we take a look at, so this is the spot market. Again, too, just take the dollar for what it is, just right smack in the middle. The Swissy, you can see, is a market where can be inverse to the stock market. Now, it is being mainly affected by the dollar at the current moment, but it can be a market that's just like the yen, where it picks up some steam if the stock market starts to fall again. Right now, things are moving because of the dollar and all, but you can see it has fallen off of the highs as the stock market has continued to rally as well. Now, the other one is the dollar yen. Oh, if you take a look at it, the yen too, before we move there, the futures. So if you take a look at this, right, same thing here. We had a level of demand here, but you had a level of supply here. And right now it is holding on to it. So it is going to battle back and forth, and then one side's going to win out. And then, so if it's really this tight, which is much tighter than the euro, yeah, you would pass on it just because, you know, it really is that tight. We're going to move into the dollar yen. So with the dollar yen, you can see that above, so it is falling off of this 60-minute zone at the current moment, but you can see that we have a retested zone, right? So the white circle is a retest. Looks like it didn't get not quite halfway in, 109.95 to 110.19, and then the upper two zones where we have not been back to, that starts at the 110.61, 110.93, then 111.13, and 111.49. Down at the lower end, this is also retested, you can see, but it's two levels on top of each other, and that's coming in at the 105.12, 104.45. I do expect to see also some movements inside this as we get on during the week as well. Right now, it is caught between, you know, this 60-minute supply and 60-minute demand, and, you know, as well, this can be inverse. Well, the JY is going to be inverse to stock market, which is the opposite picture of this, of not EC, of the opposite picture of this, right? So meaning if this moves up, that would fall. Okay. All right. So that is it for today. I hope that this has all helped you. Add a little bit on each day. For those of you that are new, what you want to do is, don't try to grasp everything in one day. Take whatever is most important to you and start focusing on that. Then as time goes on, you'll realize that it's just easy. It's just like learning anything, starting anything. If you try to, listen to everything at once, you're going to get frustrated, get confused, and not like it. But if you take one piece of it, focus on that a little bit, then start to add another piece in, then you say, okay, well, these two can add together. You'll slowly start to get it, and then you will start to really, love it. Yeah, you just love how things all come together, right? Okay, I will see you all tomorrow.